What happens when bond yields surge unexpectedly? Does it spell disaster or opportunity for hedge funds? Last year, the financial world witnessed a significant rise in bond yields. This sudden shift caught many hedge funds off guard, causing their performance to lag behind stock market indexes. However, amidst this turbulence, a select few managed to not only survive but thrive, achieving double-digit gains. One such standout was Soma Equity Partners. This tech-focused fund capitalized on the chaos, achieving a remarkable 62% result, beating both the S&P 500 stock index and the Nasdaq Composite. This impressive performance was largely due to their long positions in Meta Platforms Inc., Microsoft, and Uber Technologies. Interestingly, they also placed bets against luxury and travel companies. So, while many hedge funds struggled to keep afloat in the turbulent waters of surging bond yields, some found ingenious ways to turn the tide in their favor, showcasing their resilience and strategic finesse. So while many hedge funds struggled, some found ways to thrive amidst the chaos. Now, let's take a closer look at some of the standout hedge fund performances. Coatue Management, a firm founded by the renowned Philippe Lafont, saw an impressive uptick of 21.5% last year. In the broader long-short equity strategy, Anson Fund's Investments Master Fund showcased a strong performance with an 18.2% rise for the year. This was in part due to their successful bets on the British home builder Vistry Group. Then we have the large multi-strategy firms like Millennium Management and Citadel's Wellington Fund, who managed to surge past bond markets with returns of 10% and 15.3% respectively. However, not all multi-strategy firms could hit the double-digit mark. Case in point, Schoenfeld Strategic Advisors Fundamental Equity Fund, which ended 2023 up almost 5% for the year. Despite the challenges, some hedge funds managed to pull impressive performances. How did these hedge funds fare when compared to the broader market? It's a question that's worth pondering. In 2023, hedge funds, on average, returned a modest 5.7% through November as per research firm Pivotal Path. Now, compare this to the S&P 500 index, which soared over 20% in the same year. Stirring, isn't it? But the competition doesn't end there. Hedge funds also square off against bond market returns, which saw an uptick in a late 2023 rally. The Bloomberg's US Aggregate Bond Index, for instance, rose by 4.88% for the same period. Looking at specific hedge funds, the Eisler Capital Multi-Strategy Fund posted a positive 9.8% result. Meanwhile, across the pond, British hedge fund firm Winton Capital navigated a 5.6% positive result in its multi-strategy program. In the world of finance, every year brings its own set of challenges and opportunities. And as we've seen, even in a turbulent year, some hedge funds found ways to come out on top.